Welcome, everyone, to the Information's TITV. My name is Akash Pasricha. It is Wednesday, August 13th, and it is one of those shows today where we are taking a full tour of the tech sector. We have got FirstMark Capital coming on the show to talk IPOs. We're going to go deep into the world of enterprise AI with Habib from Writer. We're also going to talk about the current state of play in the creator economy with our friends at Kajabi. And last but not least, we are talking about the fast-moving world of AI search and a big funding round that Sequoia Capital just led. Now, before we get started, I want to highlight a new story that The Information just put out this morning. The Information has long been known for our detailed org charts that outline who reports to who at some of the biggest and flashiest tech companies. We have Meta, OpenAI, Snowflake, SpaceX. There's over 60 org charts now. Today, we put out an org chart of software giant SAP, mapping out the top 33 executives. I asked Aaron Holmes, the reporter who published that story, what the most interesting part of his reporting was, and he said, SAP wants to show shareholders it's serious about AI, and its org chart is starting to reflect that. The company promoted a bunch of executives to oversee its push into AI sales. But meanwhile, its overall headcount has slightly shrunk as the company says it's automating more back office functions like IT and HR. We will link that org chart in the show notes that just came out this morning. Be sure to check it out. Okay, we've had a couple of big IPOs this summer. There was Figma, there was Chime, there was Circle. All of these companies have very different business models, but they also share a significant consumer angle to their business. And now StubHub has re-upped its plans to go public. I want to bring on FirstMark Capital's Rick Heitzman to talk about that company and also where he sees the IPO markets headed. Rick, welcome to TITV. It's great to have you.
Thanks for having me. This is great. My first time on. So hopefully it'll be an exciting time. And it's an exciting time to talk about the IPO market and some of the best companies that are out there.
Well, first appearance of many. We intend to have you on more and more.
Well,
so,
Rick, tell me in 5 minutes.
That's as much notice as we give you.
No. Yes.
So, look, you were an early StubHub investor. This is decades ago, but do you still keep in touch with the company?
Keep in touch with the company a little bit, but I was an investor going back 15, 20 years ago in the original incarnation with Jeff Fleur kind of leading the company, one of the earliest marketplaces. And then we built the company, and Jeff did a fantastic job. And then we sold it to eBay in kind of its first incarnation. And then, but obviously, like everything else, you continue to follow the company, you continue to be interested about what they're doing, right, and obviously cheer for their success.
So StubHub, it was going to go public. They kind of pulled back a bit. Now they're saying they're going in the fall. What do you think? Is this the time? Are they going?
They should go. I think the IPO market is open. You've clearly seen that. You obviously hit on Circle and CoreWeave and Chime and now Figma last week. And I think you're going to see Bullish is going to price anytime now. So you're going to see fundamental demand for IPOs from the public markets. And it's a great time, whether you're in healthcare tech, crypto, or consumer, to test those public markets.
The thing I want to ask you about StubHub is, they waited, and look, times are uncertain here. There's no right time to go public, but they waited, and now their latest financials show that revenue growth has slowed, free cash flow margins are half of what they used to be. Do you think they made a mistake and they should have gone earlier?
It's hard to pick your window. I mean, your window, the IPO market was generally closed and was one of the worst times for IPOs between the period of 22 to 24. So they might not have had that opportunity. When we advise companies, I serve on the board of several companies. Obviously, FirstMark has been a proud investor in a number of IPOs. That you can't pick your window. The market kind of chooses your window, and your job as a founder and a CEO is to be ready when that market opens. And I think, Eric Baker, who's the current CEO of StubHub, I think was preparing for a while and now sees the market opening and I think is ready to take advantage of that market window.
And so when you're advising companies on, what to look for, what should they be waiting for to take their shot?
Well, I think you prepare, because if you think about a Figma or a Circle, people were not fully, people were questioning, was the IPO market open? What does that mean for pricing? And obviously they had great IPOs. So you have to be almost anticipating the market opening and preparing for that success before that success comes. And so now as the market is clearly open, again, as we've talked about sectors, you have to be ready to get into that market and participate in what's clearly a good IPO market and the best one we've seen in 5 years.
I want to ask you about, people talk about waiting for that avalanche of IPOs to come. The avalanche that we saw a couple of years ago, it hasn't quite returned. It's sort of a steady trickle. You know, my take is this avalanche may never actually happen. This might be a new normal where we see fewer companies going public because of the fact that the private markets are offering so much liquidity now. Do you agree with that?
That's somewhat true. I don't think there's going to be an avalanche. I think few select companies will be able to take advantage of the private markets to provide liquidity for early investors and employees. Obviously, SpaceX and Stripe are the clear market leaders there, but Databricks, and there's probably 5 to 10 companies who could play like that. But I don't think that's a broad-based group of companies. And I think that in the long term, those companies will have a lower cost of capital, more reasonable liquidity options, and having daily liquidity instead of liquidity by appointment. So the public markets is the clear and obvious exit.
You mentioned Bullish. Bullish is going public this week. What do you make of that business?
I don't know the business incredibly well, but what we've seen, and especially with Bitcoin where it is today, that there's tremendous appetite for crypto. And Bullish has the media business. They also have a trading business. So it kind of could be viewed as kind of a different way to play crypto if you're not buying crypto by itself, or you want to diversify a little bit away from Coinbase, which was the clear proxy stock for a long time. And so Bullish is going to benefit from that. I think eToro benefited from that. Circle is benefiting from what investors say of saying, hey, I need a piece of my portfolio, not only in actually the crypto coins themselves or Bitcoin and Ethereum, but I also want to participate that in through operating public companies. And I think this is the beginning of something. We have a company, Grayscale, which hopefully will go public this year, which does a crypto ETF. There's obviously Gemini is talking about going public. There's a number of other companies
Right.
will be behind it as this crypto infrastructure thesis plays out in the public markets.
I want to take a step back and talk about some of the bigger tech companies and the capital expenditures that they're pouring into these AI investments. One of the things we've written about at The Information is just the staggering amount of money it requires and the amount of money that these big tech companies are pouring into these investments. The flip side of that is if revenue growth doesn't accelerate at these companies the way that they are perhaps pitching that it should, a lot of these corporations are kind of just draining their cash balances on these investments. What do you make of that?
So, I think you're hitting on the right issue of, okay, there's been an amazing investment in this infrastructure, similar to the massive investment in bandwidth in the late 90s. We're even going back to the railroads from over 100 years ago. And at what point, are the public shareholders going to demand a return on that investment, both in terms of quantum and time? So far, especially the Mag 7 have gotten a little bit of a pass that the more they've invested, the more the stock's gone up. But I think over the next 12 months, what you're going to see is a real return on that investment. And it can be, as you alluded to, on the revenue side, but I also think you're going to see it on the cost side. And I think, you're seeing more automation, in our companies, both on the startup side as well as the large companies they sell into, they're beginning to see a real return on investment from AI, initially an agentic AI for things like customer service, but
Right.
we're going to see that more broadly driving a huge return on investment and driving real earnings growth and enterprise value growth.
So stick with me here. So a year from now, we're saying revenue growth, not only top line but also profitability. What happens if a year from now the big tech companies haven't shown that? What happens?
Well, I think you're going to see them getting punished for accelerating capex in the public markets, right? So you're
Right.
saying, hey, you bet on this thing called AI, it didn't work out. Why are you continuing to bet on a bad hand? And I think that it's never perfect, right? It's never going to be black and white. Zuckerberg's not going to put out a chart saying I'm getting a 3x return on investment for every dollar I spend on AI. Same thing with all the hyperscalers. But they're gonna have to say, hey, I believe I've done this. I'm hiring less people. People has been a proxy thus far for some of the companies who are saying, hey, I'm able to use Copilot. I'm able to use a coding assistant to get more out of less people, especially on the engineering side,
Mm-hmm, mm-hmm.
on the agent side. on a customer service, you've already had companies like Klarna come out and say, hey, we're just using less people and less agents. So you're going to see some of those quick wins that are obvious, and then it's going to get more amorphous as that quantum grows. But the amount being spent, the public market investors are going to demand for some accounting of that over the next,
Right.
call it, year or 18 months.
Right. Well, great. Rick, it's great to have you here. Thank you for joining us on the show. And we will give you more than 5 minutes notice, we should say.
No, you gave me plenty of notice.
I gave you plenty of notice this
You're
time.
going to tell me you're going to tell me how I did in 5 or 10 minutes, and then we'll see when I come on next.
Well, we'll have you on again very soon. That's
That'll
Rick
be
Heitzman from FirstMark Capital. Okay. Our next guest has built a company that is looking to be a one-stop shop for businesses and all their AI needs, whether it's agents, building new software, searching through their hordes of data, or also making sure their company is compliant and protected against cyber threats. May Habib is the CEO of Writer. The company was valued at $1.9 billion in a funding round last year, and I want to bring her on to talk more about where the company is headed. May, welcome to TITV. It's great to have you.
Thanks, Akash. Good to be here.
So, look, I was on your website last night. I was trying to really crystallize how I explain what exactly Writer does, and I saw these 5 product categories in one of the top bars: Action Agent, AI Studio, Palmera LLMs, Knowledge Graph, Trust and Security. And I only know what a few of those words actually mean. So, very quickly, I want you to go through each of those 5 and tell us what each of those 5 products actually do.
Yeah, maybe at the very top, we start with what Writer is. We are the only end-to-end agent builder platform for the enterprise. And the pillars of that end-to-end product are build, activate, and supervise. On the build side of things, what the enterprise really craves is the ability to control agentic against really specific outcomes. And so the surface areas of our build product allow the customer to really galvanize and scaffold the agents that they build across a range of autonomy and a range of structure. And so if you are a enterprise using Writer to build an agentic RFP solution, and you are connecting a CRM to a knowledge base, to a Slack or a Teams, to email, right, to construct these hundreds of pages of RFPs, you are doing that in a single platform that allows you to use the best of what agentic is really great at, right? Being able to build technology that
so you can build these agents.
Yes, exactly. And being able to make this accessible to business users who don't need engineering and coding skills and can really leverage this fundamental disruption of agentic. That is
Right.
what build part is for.
What about knowledge? What about Knowledge Graph?
So knowledge graph is the ability for us to really abstract all of the data processing that needs to happen for LLMs to have context. And so that team inside of Writer is called our retrieval team. And it's a team that works on the ability to really construct very powerful retrieval features right on top of the Palmyra LLMs to make things like, finding a needle in a haystack that much easier, to make it more possible for you to very easily, as a business user, build an RFP application that actually works, as an example. And so knowledge graph is, everything from a SharePoint to a Google Drive to a Notion. It is multiple sources of structured and unstructured data together. And then what we're doing is actually using a separate LLM to construct a semantic layer on top of those sources of truth. And then the agents actually can call one or multiple sources of knowledge.
Got it.
Customer, major investment bank, 88,000 knowledge graphs built on Writer, one for each company that they track and follow, right? So it makes it much easier to build agents that then can call that data securely.
So one of the questions I wanted to ask you here is, one of the topics we've written about at The Information are what we call the corporate data wars. And, it's this idea that you've got all these agents that are trying to find all the right information in all the companies' data sets. It's something that you are helping companies with. But then you've got these bigger tech companies where all the data is held that are sort of putting up walls and saying, companies like Salesforce, blocking access to Slack data, for example. Is this an issue that you guys have had to face at Writer?
So there's no question that for the enterprise, right, what they want to be able to do is leverage what these super agents can do, right? And the most powerful thing that we can bring to a customer is the ability to bring down silos between teams, between systems, between and across data. I think there is absolutely a right to win for the systems of record, right, around agentifying access to and around, right, their products, including to their own data. I think, rightfully so, folks don't want to, create a subpar customer experience by having a ton of point solutions deliver like thin functionality on top of what is
Right.
essentially the data that they house. And at the same time, right, customers on the enterprise side who are spending tens of millions, hundreds of millions of dollars on systems of record, want to make sure that the agents that they build there and elsewhere have got access to all of the context that actually provide the value. And so the way that we come to this is by really trying to be that trusted orchestration layer that delivers very, very high impact end-to-end workflows where
Hmm.
the right to win is obvious. If I am combining call transcripts with CRM data, with deep web research, with proprietary information and databases, with business know-how and processes, right? That is just so far beyond what any one system of record can
Right.
do.
Right.
It provides, a ton of stickiness for us, a ton of differentiation compared to what you get from, consumer LLMs, as well as the systems of record.
Right. Well, one of the interesting comments on one of these stories about corporate data wars that we wrote, there was somebody who commented, it feels like we're moving into the gloves are off phase of AI. Do you agree with that? And, I want to take a step back here. We're not just talking about corporate data wars. We're talking about, people poaching researchers, right? We're talking about, trying to raise the most money. Does it feel like that phase of AI to you right now?
I do think it's a tale of two cities right now when it comes to that. There's definitely all of those living on the very, very edge of where this market is and where the technology is going. That it feels like, a knuckle fight every day while the playing field is shifting literally on a daily basis. And then you've got the vast majority of the enterprise that is, like still catching up to where AI was in 2023. And I
Hmm.
think the ability of the models to do cutting edge frontier work is like really at odds with most of the enterprise's experience with like 40-50% hallucination rates and inaccuracy rates that prevent a POC from scaling and the real lack of production grade ROI. And
Hmm.
so we're really seeing that. And we see a big role that we play is abstracting that rate of change to the enterprise to just continuously being able to deliver that innovation in a way that is very trustworthy. So enterprise AI that doesn't just talk and wow, but it actually works and functions and can scale.
Right.
And that has been a big, differentiator for us. But no question, every day is a 0 to 1 type of mindset at Writer, no matter how big we get, no matter how deep we get inside of the enterprise.
Great. Well, look, May, I want to thank you for coming on the show. It was great to have you, and you guys are releasing products very regularly. And so next time you release a new product or maybe a sixth category to that product suite that you have on your website, you can come back on the show and you can tell us all about it. That was May Habib, the CEO of Writer. Well, the creator economy is an interesting moment right now. In many ways, it's never been easier to build an audience, but with all the competition, it's also never been harder to build a loyal audience that you can actually monetize. Joining me now is someone whose company hopes to solve those issues. Ahad Khan is the CEO of Kajabi. It is his first time on the show. Ahad, welcome to TITV. It's great to have you.
Hey, Akash, thanks for having me. Really appreciate it.
So, look, when I think of Kajabi, I think of the courses that creators sell online, make people pay for them. Is that how you make most of your money right now?
No, so we make money via subscription and payments revenue as a platform. The way our customers make money is actually very variable depending on what kind of business they want to build. Historically, we were a courses business. We've actually managed to broaden our portfolio quite a bit. So we have courses, obviously, communities, newsletters, podcasts, coaching products. We essentially want to be the one-stop shop for people who want to be able to monetize knowledge, experience, and expertise. And as that market has evolved, we kept up with our product portfolio to make sure they can package that knowledge, experience, and expertise in whatever way that makes most sense for their business and for their audience.
So you guys are it's a straight up subscription offering. You don't take a percent of sales that the creator charges, I guess, or
That's exactly right. So the way we think about it is that we don't want to punish success. So the idea here is that if you pay us a subscription, if you're making $1 million on Kajabi, which thousands of creators have, or you're just starting out, your ability to scale and the revenue you generate isn't inhibited by a platform fee. Like, it's just a very different approach to the market. And we believe that's really important because as people get smarter and smarter about the right ways to build businesses, right ways to generate revenue, but most importantly, the right ways to generate profit, they think about how their revenue is being split between themselves, the platforms, maybe other parts of their business. And when they come to a company like Kajabi, they know how much they're going to pay every month. And they have that kind of visibility and that forecasting ability to know that if my revenue goes up, my profit goes up at that same rate because my platform fee stays flat. And that's a really different approach we have to the creator economy.
Does that impact your bottom line at all? I mean, I'm imagining a creator that, is making millions of dollars on the platform, for example. Maybe they're demanding more from the platform. Maybe they need more support from Kajabi. They're still getting charged that same subscription fee and, you're not taking a percent of sales. Does that impact profitability for you guys?
No, we're profitable. So we feel very good about our financial position. And even when you think about that dynamic of like one creator makes millions, like again, we have thousands of them. We have a person who's made over $100 million on Kajabi. We actually have a lot less concentration of your top 1%. Think about YouTube, other platforms where the 0.1% make all the revenue. That dynamic doesn't really exist on Kajabi. We are really proud of powering kind of the middle class of the creator economy. So the average person monetizing Kajabi makes over $100,000 a year. The average customer here is like 6 figures in, doing very well, building a business around knowledge, experience, and expertise, and has a place in Kajabi where they can build all that product we talked about. They can email their customers as well. They can take payments. They can understand what's happening on their business, all within one platform. And that's what we've been building for the last 15 years. And it's culminated in over $10 billion of creator revenue being built on the platform today.
Well, I want to talk about that stat because when you guys put out the $10 billion figure, this is, of course, $10 billion in payments that have gone to Kajabi creators. One of the things you guys said was that the average six-figure Kajabi creator has between 1 and 10,000 followers, email lists of 4,000 people, and just 309 customers paying for their digital products. Again, these are people that are making 6 figures, and I mean, we're talking 300 customers, 4,000 person email list is, that doesn't strike me as a huge email list. So
yeah,
and I should say that the you guys put out a figure. I think it was $9 billion in payments to creators in February, and it was just later. I guess. What was
a couple months later,
a couple months later, that I got to 10 billion. So, like, what kind of creators are we talking about here? Are these like woodworking enthusiasts that are?
It can be. I mean, these are people. Yeah, these are. It's anywhere from how to sleep train your kids to how to forage mushrooms to how to do a certain kind of like real estate investing. It's what we really think about it. It's like the best thing about the creator economy or digital entrepreneurship is that the world becomes your market, right? And when you have interesting ideas or knowledge or experience or expertise, or frankly, a brand where people are like, oh, I want to listen to Akash talk about how to build a media business, right? That means all of a sudden that you have an audience who's interested in what you're putting out there. Ways to validate that, we talk about it as like social media platforms are fantastic places to validate that the things you're saying have a potential audience, right? If you're able to build followership. But we really believe that like social media are great places to build audiences, but bad places to build businesses. And that's where Kajabi comes in. So to your point, even modest email lists or customer accounts can translate into 6-figure businesses, just given the dynamics of I can directly build a product, sell it directly to you, price it however I'd like. And all of a sudden, I don't need millions and millions of followers to make 6 figures. I need a couple hundred customers paying me whatever I want to be able to charge for the value that I'm putting out there. And I'm able to build a sustainable living. And we have tens of thousands of those customers on our platform. And to your point, GMV continues to grow at a really rapid clip. GMV is
Right.
creator revenue, right?
Right.
And so our whole belief is that as a creator economy gets more sophisticated, creators continue to look at themselves as more brands and business and entrepreneurs than just putting content out there. That education, that sophistication is going to lead them to think about platforms like Kajabi, because you can actually build your brand and business on Kajabi in one place.
I'm going to talk about sort of the future of the creator economy and also the future of content. You know, we talked about some of the very niche ways that creators are making money on your website. I talked about woodworking. You know, you mentioned a couple other. I see there's public speaking, video effects, animation, stuff like that. So, look, the creator economy has really, niche has served a lot of creators really well. And I have trouble thinking about how much more niche we can get and, like what the next phase of the creator economy is. What's your view on that?
Yeah, I mean, I honestly, the funny thing is, I think about the media business quite a bit when I think about this. And what I mean by that is, I'm 44 years old. So when I grew up, there weren't that many places to go get information, right? What happened in social media is a great fragmentation.
Right.
Now all of a sudden you can go to X, you can go to wherever, you can go to the information and find very bespoke, high-end content that's specific to what you love. And I actually think that's the future of what the creator economy enables too, which is why a niche sounds small, because that's what I think people are used to, like the synonym of niche is kind of small. But a niche doesn't mean there's not a lot of revenue to be built. It just means you got to be able to find an audience that is interested in what you're putting out there and build product that serves those customers very well, and you're able to build a business. So I actually am more bullish on fragmentation in the creator economy and the digital entrepreneurship space now than I was 5-10 years ago. Because I just think that
you think it's going even more, like we're going from woodworking to like shelves gets one creator, chairs gets another.
Oh, for sure. I'll give you a great example. Like we have a company called Honeyflow. I think it's a family based in Australia. They teach a specific type of beekeeping, right? And so they use Kajabi for their website, for their email list, for their digital courses and community, but they also have a physical goods business. So they sell the actual products that they teach you how to like become a beekeeper on in one specific niche of beekeeping. That's an example of like the deeper you go, I think there's just such a big market out there that people underestimate their ability to define their niche a lot easier than it was before.
Last question for you before I let you go. I want to get your take on AI generated content. Do you think this helps or hurts creators?
I think it's kind of both. So my view on it personally is that AI content, and particularly digital content, it's going to be the great commoditization, right? Everything becomes really easy to build. You press a button, your website's up, your avatar's up, whatever it is that you want to be able to represent yourself using AI, it's done. I think what that's going to create is a dynamic around people wanting genuine experiences with people, and brand and individuality is going to matter more in that world. So again, I can go to any internet site and find information, but if somebody who's done something, again, that idea of knowledge, experience, and expertise, someone who's demonstrated their ability to be a fantastic media producer, I'm going to go to that person and digest their content because I know that they've accomplished something. And I actually think that's the way the world is going. Now, that creator is going to be leveraging all the AI tools at their disposal to make sure that they're as scalable as possible. But I think at the end of the day, genuine connection is going to be one of the things that actually proliferates in this era, while AI is going to be like a tool to like scale that capability more than replacing those individuals.
Does Kajabi allow for AI generated content to surface on your platform?
Yeah, I mean, at the end of the day, our platform powers other people's businesses, right? So those people can decide what they want to do with their business, however they want to.
So with the courses, I mean, if they want to use an AI avatar to create, 10 new lessons, they can use the avatar, and that's what they're paying, what the customer is paying for.
Absolutely. I mean, again, we're a platform. Think about us like the people with the hard hats on in the background building a platform so our creators can go out and build content and build a business they want. And so we enable that if they want to do that because it gives them scale.
And do you put like a badge on it saying this is AI generated content or anything like that?
Again, it's up to the creator to decide what they want to do because it's their business. So we're very different than like a YouTube or someplace like that where we're servicing the content or serving the content ourselves. This is the creator deciding how they want to do it.
Got it. Well, Ahad, it's great to have you on the show. I anticipate that we'll have you on many, many times as the creator economy gets more and more exciting. And next time you come on, you can bring on the most niche, video or creator that you guys have on Kajabi. I'm excited to see just how specific we can get with things. So thanks for coming on. Appreciate it. AI has certainly changed the game for advertising. And now, one of the big questions for companies is how they get their name prominently featured on all these AI chatbots that people are using. That is the challenge that our next guest is taking on. James Cadwallader is the co-founder of Profound. The company raised $35 million in a Series B this week from Sequoia Capital. I want to bring on James to talk all about his business. James, welcome to TITV.
Hi, Akash. How you doing?
I'm doing well. So, Profound. I mean, before I get to the money that you've raised, because you actually just raised around like a month, 2 months ago, and then now you another funding round.
Yeah, I guess as a bit of clearing up the narrative there, we had actually closed. We raised the Series A that was led by Kleiner Perkins with NVIDIA Ventures, and a bunch of really awesome angels, and SV Angel as well. We're in that. But we did that earlier in the year, but we announced there was quite a big gap between closing that round and announcing it, and then
waiting for the good weather. Waiting for the good weather.
Exactly.
To put all the announcements out so you can throw a good party.
Exactly. And then we announced the series, we closed Series B, as you mentioned, with Sequoia Capital, and we announced that quite quickly. So I think it's created this narrative that it was back to back. It was a little bit less back to back. Nevertheless, yeah, we've raised quite quickly.
And the only reason I say it is because it's not just Profound. I mean, this is happening with companies much bigger too. With Ramp. I mean, I don't know how many weeks were between Ramp's bigger fundraising. Look, I want to talk about what Profound is. Tell us about what the business actually does.
Sure. So we're experiencing one of the biggest platform shifts, maybe since the internet itself. For the last 25 years, consumers have relied on blue link search to retrieve information.
Right.
And really think of that, the 10 blue links as a marketplace where, if I'm a consumer trying to research corporate credit cards, I would get a list of blue links, giving me, show me places like chase.com, or maybe it'd be a directory like NerdWallet or rank.com. Is my Wi-Fi a bit bad, by the way? Am I lagging for you, Akash?
I think I can hear you. You're coming through clear to me.
Okay. All right. Good. Sorry. So if I apparently we were on the brink of AGI, but the Wi-Fi thing we've still yet to figure out.
So you were talking about the blue link economy. I mean the whole the way I understand your business is we had SEO, or we have SEO. It's still very much a big business. Profound is trying to sort of replicate that, but in the context of AI chatbots. Is that right?
Yeah. So yeah. Sorry, I lost my train of thought there. So we've relied on blue link search for the last 25 years, and now people are just turning to platforms like ChatGPT instead. And how AI answers these questions, whether AI chooses to mention your brand, your product, or your competitors, is becoming a boardroom level concern for every company on the planet. We launched Profound as a marketing platform for an era of superintelligence. So thinking about it through, thinking about this new version of the internet through the lens of a marketer or a brand or a company, you need to understand how frequently and how favorably AI is talking about your brand, your products, your services. And then you need to create content intended for bots or crawlers rather than humans, that you're creating content that will get pulled through into these AI responses.
Right. So one of the questions I had for you is how you actually measure this. I mean, part of it is seeing, if I have a website or a company, how that shows up. And you've got a leaderboard actually on your website. So, these are the companies that are showing up the most favorably or the most often in these chatbots. How do you actually measure how frequently or how successful companies are showing up?
you kind of triangulate from different data sources. So the obvious one is that you can ask the model. So you could ask, ChatGPT 100 questions or 1,000 questions about best basketball sneakers and see how frequently Nike gets pulled through into those responses. But there's more sophisticated ways to kind of triangulate that data where you can also, plug it by plugging into Nike.com's website. You can see through network log traffic when the models are citing various pages in the Nike.com catalog.
And then how do you compare, like, for example, the way that one company shows up on ChatGPT might be differently the way they show up on Gemini or on Grok. And so how do you, these are sort of not really apples to apples comparison. How do you sort of square those differences?
Yeah, well, it varies from platform to platform, right? Where, traditional search was, more of a monopoly. I think I'm allowed to say that because I think I think Google was deemed a monopoly quite recently.
Yeah.
Whereas this is a more fragmented landscape. There's lots of players and brands care about how they show up in Gemini and ChatGPT, but also platforms like Grok and DeepSeek and Meta AI. So, it's understanding your visibility, and we see huge variance across platforms. But the thing that I'd mention that I think is the most important thing here is what we've built is a platform that's not just about understanding. It's not an analytics platform. You can actually leverage all of that data, all of those analytics within the Profound platform to create and distribute the content that's optimized for AI retrieval, all within the Profound platform. And I think that really is what makes this a sort of exciting 2025 business, is because, what would have required a team of 10 or 20 marketers or analysts to go and poke through all of this data and analyze the patterns and come up with insights and ideas and create content. It's now we're able to do that with reasoning models.
I want to ask you one more question before I let you go. We wrote about this war in AI search that is ongoing. We wrote about it specifically in the context of retailers, trying to navigate this landscape. And I'll link that story in the show notes. But we actually talked to Perplexity's team about how they view this issue. And one of the quotes that Perplexity actually gave is they said, "We don't have any way for someone to change what an answer is." They went on to say, "Our entire way of operating is so that SEO doesn't emerge in this new category." That seems to be completely at odds with the way your business hopes to help those companies, is helping them show up more prominently. What do you say to that?
I mean, Perplexity has to get the information from somewhere, right? So, it does. If New Balance releases a new range of basketball sneakers next week, Perplexity doesn't just inherently know that. Where does it get the information from? It has to go somewhere. Does it go? It will quite often go to the New Balance website. It will quite often go to, comparative listicles. I think philosophically, it's flawed to say that that there is no such thing as kind of ground truth. I think there is no best pair of running sneakers for Akash. I don't think that exists. I think it's based on information that exists on the open internet. And I think where those opportunities are, where those opportunities are, brands will, of course, marketers are going to do marketing. There's no, I think it's abhorrent to presume that marketers are not going to
market.
Yeah, that's what they do.
Right. Yeah.
Irrespective of the platform, if it's newspapers, TV, internet, or AI.
Yeah. Well, look, it's a fascinating business. James, thank you for coming on and talking about it. And as this conversation gets deeper with the AI search wars, I mean, this is going to affect every industry and every retailer. I look forward to having you on more to talk more about it. That is James, the co-founder of Profound. Well, that does it for today's show, folks. A reminder, we are live on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. I want to thank Amazon Web Services, who is our presenting sponsor for this production. And I want to thank you for tuning in. We really do appreciate your viewership. I am already excited for our next show tomorrow. And so until then, bye-bye for now.